having put out on the table the variety of issues impacting TPD insurance in Australia and its capacity to remain sustainable and fit for purpose, the panel now turns its attention to talking about possible solutions. Now, some of these conversations are blue sky conversations, and you'll agree or not, but either way, this next conversation is going to give you food for thought. Let's just keep rolling along pretty well with this conversation, but moving to a conversation about the solutions. And we've already started talking about the solutions, particularly with regard to exclusions or compartmentalising a mental health claim benefit. But again, Carly, starting with you, let's talk about the future. Let's talk about what solutions might be deliverable for a revised, perhaps a reimagined total and permanent disability offer that is fit for purpose.
So I guess with the Aluka hat, when we wrote the paper recently, we looked at some ideas around, we've seen hybrid products in the market, instalment design TPD, mostly in the group space.
Say again,
hybrid and instalment design, so where they're
as
paid
instalment benefit.
Instalment, so their full benefit, they're paid across 3 or 6 instalments. And there's pros and cons to those things. Obviously, that person then has to prove at every instalment assessment that they're still TPD. And we're calling them TPD, but we're still saying please participate in rehab. So the label of TPD is the problem in terms of we want you to get better, but we're still going to make you have this assessment to prove that you're incapacitated.
Well, you're calling them TD, you're calling them totally disabled, but not permanently, and paying them that incremental benefit over time.
But there is definite benefits of those. So we're seeing a lot more people return back to work or use rehab in a positive way to help them. And I think even having those payments along the way, they can then afford treatments that they might not be able to afford if they were waiting till the very end of the assessment to get their big bulk payment. So I think that there's instalment and hybrid designs are definitely showing some potential. We also talked about severity based, similar to trauma, I guess, and particularly now we're seeing medical advancements progress. I think the difficulty then is how we would assess the severity of somebody's mental health condition.
With a percentage out of 100, you mean, about the severity? It's okay.
More subjectivity.
More subjectivity. And I think even if you look at the Victorian workers' comp stats at the moment, they've just tabled a paper to totally exclude mental health from being a claimable condition in Victoria workers' comp, except for emergency services where you have PTSD, because mental health costs the scheme so much money. So I think we need to take those learnings and say, how do we offer something better for mental health? Not saying that there's nothing out there that we can do, but there has to be solutions. And so maybe things like instalment design, where they can seek treatment, they can participate in rehab, they can look at sustainable work in the longer term. Maybe those are the options that we need to.
All right, we'll come to you guys in a minute, but just if we go around the table alone, and then you come to find out whether or not those restructured products will be easy to underwrite. But Alana.
Is this just now, I suppose, discussing what is a way forward?
Actually, anything you want to say, really.
So, I mean, just having a think about this coming into today, Peter, clearly we don't have the answers. I think it's great everyone's sitting around the table putting their heads together. My take on this whole thing is that the problem is not TPD at the moment for the industry. So it's great we're talking about TPD, but when you look at the new business sales that are coming through from risk advisors, it's 2% of the in-force volume is new business, and about half of that is new. So I would actually potentially, and this is so to be dramatic, I mean, you could almost argue this industry is in a bit of runoff at the moment with regards to risk sales. And I think you spoke about earlier saying how much you do at the moment, right? So I think, if you imagine a system where we had no new cars coming in and we weren't benefiting from new technologies and new safety things, and we were still using CDs and sort of the Bluetooth, whatever, you kind of have a system, another industry works where so few new customers are coming in, to replace old. So that was my first point quickly. The second one was just picking up on your point, Chris, around innovation. And I kind of feel that consensus and innovation are two kind of polar opposites at the moment. And this industry tries to get everyone around the table, all the the groups, all the insurers, reinsurers, rating houses, regulators, there's multiple regulators, there's trade bodies, and we're trying to all come up with this single, we can all agree what the answer is, and I think that is the first way to move away from innovation, and I would like to see more.
I would just say, Alana, is our business is probably the biggest distributor of retail life insurance in the country. Trust me, there is innovation coming from outside core insurance. We've had people coming to us saying, if we do this for you, so there is there's disruption, they know there's change coming, and I think you've either got to adapt. If TPD is broken, let's start fixing it and come up with solutions. Stop stuffing around with, there is issues around distribution and stuff, but it'll be first movers that actually start doing some stuff around this stuff rather than just sitting on their hands and waiting.
Right, there you go. There's our next round table, innovation.
There is certainly stuff coming. I know because we've got distribution, we've got people that aren't major insurers coming to us going, whether that be reinsurers, whatever, saying if we can deliver this, we've got all this capital from overseas, we can do the insurance, you guys have got what we need, which is distribution, can we talk, and can we deliver something for you that's better thing? So it's happening.
It's happening, and I guess that was leading to my point of how do you encourage that to be bigger and wider in the industry, and I think everyone's a bit of meat in the sandwich at the moment. Everyone's worrying about, the insurers are worried about the advisors, but also the reinsurers, so I was going to just mention, Peter, like in the sandwich, the one piece that I think I struggle with a bit is the way the government policy works at the moment and what it's trying to say. Does it want, 4 banks, 3 insurers, 3 super funds, 2 insurers, or is it actually wanting lots of competition, which is the dynamic you're talking about? So my sort of take on this is to what extent government through the regulators can actually just open up the competition playing field a bit more, support new entrants, support new products. We've had new entrants being kicked out, not being able to get off the ground in Australia, well, maybe the ones you're talking to, but to the extent that government can be clear on the policy it wants, and then regulators can help make this level playing field to encourage competition. To me, that is how you change what's going on.
For sure. Absolutely. So Carmel, what's your take then on the underwriting of the future TPD?
So first of all we've gone into solution mode, and all of those solutions barely touch underwriting, because at the end of the day, that would be the assessment that actually changes at claims time. With my sort of speaking as an Iluka board member, and speaking for the membership, the key areas were around supporting appropriate timeframes for assessment and permanency, alternatives to single lump sum. We've talked about incremental support, and we know that exists in the market already. Not that many people have followed suit. Consider different payments, so that dependent on the nature of the severity. So a musculoskeletal complaint might not be the same as a neurological disorder, for example. And on the underwriting side, and I know this was tabled as part of the IDI work that came years ago, is, as I said, we're going to have one shot to get it right as underwriters, and so what they needed, the needed underwriting time may be very different than the needed claims time. The occupation they may change, possibly will change, probably will change, and maybe getting a chance to reassess them every 5 years or so is another thing that could be tabled.
With the existing contract, not to have to write a new policy though.
That's right.
Okay, fine, got that.
And perhaps limited too. So you wouldn't necessarily need to reassess them medically, but talking about needs, and they might reduce over time. You might have paid off your mortgage by the time you...
So it's more demographic than medical?
Yes, potentially, yeah.
Okay, well, interesting. Thank you very much, Carmel. Does that inform the life companies?
It does. It does, and it's been really great to be part of this discussion and to hear, the appetite for innovation, and that does need to be supported by regulation, absolutely, because our experience as a life company in the past has been that innovation has had a first mover disadvantage rather than an advantage, and it would be wonderful if that is not the case in the future. For us, as we're thinking about solutions for the TPD challenges, what we keep coming back to is what is the need that this product is serving, and which solutions best sort of meet that need. It sounds so obvious, but...
Are you up for it? Are your colleagues, without disclosing any confidences, are you open to the potential reimagining of TPD?
Absolutely, because there are so many pressures and reasons for doing that. You know, the cost pressures, the one size does not fit all of the current product
The
design.
name does not
The
work.
name
The name
doesn't
doesn't
work.
I'm really interested to hear the three of you talk about the appetite for innovation, because we often, the voices that I hear in the industry are saying, well, advisors will hate this.
Yes.
They will absolutely hate this. Insurer just tweaked around the edges of their TPD earlier this year and actually got quite criticised for doing that.
Do you know how bad the insurers are at selling new stuff to people who sell for a living?
Right, okay, right.
I mean, real. Here it is. This is wonderful. No, it's not.
And then you've got all of your BDMs coming at you at once with all different things. So you're learning all new products, and we saw how that went with the re-emergence of income protection,
Right.
where a lot of advisors went, wait, it's way too hard.
Our IP will include pet insurance.
Okay, so that's the delivery of the idea, but what about the idea itself?
The idea itself, I think, has to come from the advisors. We're making things way too complex. Our clients don't understand the complexity. So even the way we try to advise on it is complex because of statement of advices and things like that, which hopefully will change. But clients don't want complex, they want simple. Our job is to make the complex simple. We don't have simple solutions for clients' needs.
So these discussions about product design and what's available in the market and the choices that Australians have about the type of TPD that they acquire are really important. The first thing I'd say, though, is that the TPD that's in the market is designed to reasonably meet the needs and objectives of customers and members. Otherwise, we wouldn't be selling it. It is going to meet those reasonable needs and objectives, and I think we should bear that in mind in terms of the current state. But looking forward to what's possible to innovate and make sure that the products become more relevant or potentially provide better value than they do today, there are some interesting questions that are out there in the industry. I think the one that stands out the most of the four that you've referred to is the possibility of offering products that have a blanket mental health exclusion. At this stage, that's not on the table for the industry because of very clear requirements in the Disability Discrimination Act around exercising what is effectively discrimination by excluding mental health conditions, unless there is an actuarial basis for doing so. And there's court rulings or tribunal rulings that indicate that a blanket mental health exclusion doesn't meet that standard. So that court ruling is reflected in the Life Insurance Code of Practice, and the commitment of the industry through the code is not to develop or sell products that have blanket mental health exclusions. So I think any conversation around future state, what might be possible in terms of more modular products needs to bear that in mind, that that's the constraint that the industry is working under. And then beyond that, the other factors that you've referred to, I think in many respects come down to what individual insurers and their trustee clients would like to do in terms of meeting the needs of their customers. So it is a product design and innovation question, and something that individual insurers need to be considering.